Hello friends. As we are at the eve of 2018 last day, and we are on a New Year Eve 2019 starting from tomorrow. So let me get you through the 2018. Let us walk down through the 2018, how the market performed and what were the implications and happenings all over the world, globally as well as domestically, and how it impacted the markets and which are the performers, sectoral performers and the individual stock performance. So 2018 is a very tumultuous year as far as global financial markets are concerned, not only India, and India is no more immune to that. Many things have happened, but yet Indian market indices, Nifty, if we call Nifty 50, it has performed and is a top performers, and it has gone up by 3.4 odd percent as we speak now. Even mid-cap indices, those are very down by 15%, and small-cap indices is down by almost 20 and to 30%. So barring these two, large-cap has performed very well. And if we talk about the sector performance, then in that case, IT is the biggest gainer, and it has gone up by 23 odd percent. That is the biggest contributor, followed by FMCG, which has gone up by 14%, and financial services 11%. If we talk about the negatives, then there are a host of lists there. But if we talk about the top losers on the sectoral front on the negative returns, Nifty realty companies is down by almost 33%. Even media is down by 26%. Auto this time surprisingly has negative returns of 23%. Even metals, due to trade war issues, it is almost down by 21%. And PSU Bank, of course, it is still ailing and not able to come out of the NPA issues. This is the second consecutive year they are underperforming. And the pharma still suffering from US FDA issues, one or the other, and the results are not coming to the mark, and still they are down by 8% as the indices. Even if we talk about individual stocks which have done well in terms of Nifty 50 only, then if we talk about the top 5 performance are even after NBFC liquidity issue, the stock was hammered, Bajaj Finance, and yet at the end of the 2018, it has given a 50% return to the investors. Tech Mahindra, TCS both are up 42 to 40%, and HUL is up by 33%, and Infosys, which is marked up by 26% even after a buyback. If we talk about the losers, then Tata Motors is the worst performer in 2018. It is down by a whopping 60%. Yes Bank post corporate governance issue and the now changeover of the board seat on replacing Rana Kapoor is an issue. So that will again continue in 2019 early. But right now it is down by 42% odd. Bharti, Vedanta, HPCL all are equally down by approximately 40%. So overall, this is a sectoral outlook, a sectoral performance and the stock individual on Nifty 50 front. FIs, if we talk about the outflows and inflows, FIs have sold equity worth almost 1,10,000 crores in from Indian equity markets. So that is FDIs have bought 1,10,000 crores of equities, the highest ever in last decade. And FIs have sold stock worth 50 to 53,000 crores odd from the Indian equity markets, no matter whatever happened to the markets. As far as now we talk about post this performance, market have seen quite a few turbulence in terms of since January. When January started, it was the Federal Reserve, they have maintained the rate at around 1.5%, and at the end of January, when the budget came for India economy, the finance minister implemented re-implemented LTCG, long-term capital gain tax on equity by 10%. That has not been welcoming by Indian investors as well as the FI investors, and the market nosedive to a significant level. Post that, we had again the Fed FOMC, which have started raising rates by 25 basis points. So in the March 2018, they raised rates by 25 bips, and the Fed rate hike was 1.75%. And after that, from April onwards, the ongoing trade war between China and US, the world's top economies, have started and injected, and from the month of April, and they have started putting 128 products, about 15-25% rate tariff hike on 128 products from each others, and that has sparked some fear on equity markets as well as the metals all over the globe. Again, on China, reaction was equally there. Even in terms of May month, it was again the same news flow was continued, and then again June month, Fed has again hiked rate by under 25 basis points. So they've done this 4 times in this year, and likely to be doing in 2 times more in next year. Again, August, when we stabled in June and July in terms of economy. Again, in August month, there's a Turkey turmoil happened, and Turkey currency was depreciated by a whopping 50-60% in just few days. And that has created panic all over the globe and in the emerging market as well. There is a no-deal Brexit had happened in terms of in the month of August, and again there is a rate hike by Fed meeting in August month by another 25 basis points. September month, which has come across for Indian economy, is ILFS debt crisis, which has happened, the default, and that has driven turmoil into the across NBFC sectors, and all the NBFCs were down by almost 30 to 40% from their peak rates in prevailing month. So that has done there, and again Fed has hiked rate by 25 bips, and again there is a reopen of negotiation between US and China about the trade war to truce that, but it was again failed. And October month, it was again looming concern over US sanctions on Iran, where Brent crude prices went up to almost $86.75 per barrel in no time. However, it reacted further, and now it is stable at around $53 per barrel in no time again. There is a corporate governance issue, and Rana Kapoor's exit. It was not a reconsidered extension by RBI and the other regulatories for continuing as a chairman, CEO of Yes Bank. So that has happened in the month of October end, and Yes Bank that's why it was down by 42% odd in a year-on-year mark. On the November month, again there was PCA norms and disagreement with finance ministry and the RBI regulatories. We saw exit of RBI governor in the month of December, which sparked in November month, and then we saw that that has happened in December month, sudden exit of Urjit Patel as RBI governor. However, the reappointment was done in the due course. US Fed again rate hike has happened in the month of December by another 25 basis points, and the truce between US and China is still going on. So overall, if we summarize all this, then lot many things in even in the terms of domestic event. January was a PNB scam, bank fraud has come out in the light, and because of the diamond tire Mr. Modi and Choksi. Then we saw again on the domestic front, again the budget came, reclassification of mutual fund portfolios, Fed hikes, tariff war, spike in crude price, stronger dollar against world currency, rupee hitting to a new low of 74.69, and financial meltdown in Turkey, Brexit, ILFS, NBFCs, exit of RBI governor. And then the most recent one is the state election, where BJP could not win any of the state in 3 state elections, and that was the last political event which has come, and there are many other more events in corporate and the political world. Yet we believe that 2018 has done quite well. Brazil was the top performer. India is the second best among Asian markets, which has done well. So this is what the highlight was 2018 over on technical front. When we see that index has made a high of 11,170 earlier, and then from there it has corrected back to 9,952. Again went up to new high 11,760, and then from there it corrected to 10,000 or 10,000, hardly 10,000, near to 10,000 level, and now stabilized at 10,900 odd level today. So there it's a lot many ups and downs, creating new highs. The new history has created in such kind of a confused state of mind of US economy is growing, Fed is hiking rate, RBI is not hiking any rates. So all these have come out, but yet Indian market has performed very well. As we enter into 2019 from tomorrow, we will have a lot many burdens from 2018, and we will have quite a few things which are yet to unfold and which will impact the market. Like, again, Lok Sabha election in month of April, May. There is a Brexit event in the month of March. So overall, that will impact the market. And as we enter into 2019, fundamentals appear to be at the start of new uptrend with stronger rupee, lower crude prices, lower inflation and lower interest rate as well at domestically. Valuation, if we speak about Nifty, then we are quite comfortable, the fair valuation as of now, and market sentiments, but the market sentiments are a little depressed, and thus equity markets appear to offer more upside than downside from the current levels. Growth is likely to move higher as far as the corporate earnings are concerned. Credit growth seems to be at the beginning of the new cycle, and rates are likely to take a pause by RBI. That is our belief. And corporate earnings shows recovery in profit margins for last at least Q2 numbers, and Q3, Q4 post that we believe that the next year earning FY20, which will be again from the July month onwards. So we will see their improvement by at least for the full year about 18% odd. So that is one. And currently valuations are at a historical mean average, so we are not that expensive, and it can go in either directions depending on the factors of the outcome. The concern would be on on US and China trade war, how it will shape up in futures, because there is a ups and downs in terms of statements by US president. So there needs to be watch out as a concern. Again, any spike in crude prices or strengthening of dollar against world currency, so that needs to be watch out for. And any adverse outcome of Lok Sabha election in April, May 2019, that will keep Indian markets on the edge. So these needs to be watched out. But however, on the valuation front and overall economy perspective, we are at the best place in terms of micro and macro data perspective, and earnings are on a cusp of up cycle. So that all gives that downside is limited for Indian markets in 2019. Second half will give throw some more clarity with better returns for the investor. Let's hope so. And with that, wish you all a very happy New Year 2019, and that's all from my side. Thank you very much.